Hey everyone. Unfortunately, we got more bad news for Supermicro computer stock investors as the company is being probed by the Justice Department following a critical report by the short seller Hindenburg Research Group. Now, I'll evaluate these latest reports and kind of provide a zoomed out picture of what's been going on with Supermicro Computer over the last couple of weeks, as it's been plagued with this issue for a couple of weeks now, and the stock price is down considerably as a result. Understandably, Supermicro computer stock investors are confused and concerned about the latest developments. I'll try and help ease those concerns in this video here.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Supermicro computer stock was down 16% as of 10:35 on September 26th, as the company is being probed by the Justice Department following a critical report by an activist short-selling firm, according to people familiar with the matter. Now, this activist short-selling firm initially reported that the company was overstating its revenue and misstating its financial statements. Supermicro Computer hasn't helped the situation with its reaction to this news. Let's look further. The prosecutor asked for information that appeared to be connected to a former employee who accused the company of accounting violations. Short seller Hindenburg Research published its report about Supermicro Computer on August 27, which sent the stock price down significantly since that release, and it said it had placed bets against the company's stock. The report focused in part on allegations made by the former employee Bob Luong, as well as transactions between Supermicro and companies run by family members of its chief executive, Charles Liang. Now, typically, short sellers are incentivized to put out reports negative about a company because they're short the stock. If they force the company's stock price to fall, they profit off of that situation. And sometimes they can do this in a quick matter where they'll publish a report, send the stock price down by 10, 20, 30% in a matter of days, and then get out of their investment before the company has time to respond to the short seller allegations. And then when the company does respond to the short seller allegations, the short seller could be out of that investment already. It could have booked its profits and moved on. So I don't place too much weight when a short seller like Hindenburg Research publishes a report about a company. And that's what I said when the report first came out. I said, let's wait and see what comes out of this. But what's been troubling is not just the short seller report, but the actions that have followed, including the action today, where it's getting probed by the Justice Department, which is further evidence that there might be something going on. Now, we don't know for sure if there is something going on, but the further this drags on and the more of these kinds of developments come out, the worse it is for Supermicro computer stock and Supermicro computer stock investors. Now, Supermicro Computer in 2020 paid a $17.5 million settlement to the Securities and Exchange Commission for claims about widespread accounting violations. So Supermicro Computer has already committed accounting violations in its past, and so this gives more credibility to the claims that it's committing violations right now. Although I don't know how likely it would be for a company who just got caught 4 years ago to be doing the same thing again now. I don't know how likely that is. However, for the short seller, having a company attacking a company that has previous violations makes for an opportune target, because you can point to this fact and say, look, this company has done it before. So if we attack it, we have some credibility on our side because the company has a history of committing a violation. It's public information that it had committed a violation. So I don't think the prior violation makes it more likely that Supermicro is committing a violation right now. I do think that the prior violation made it a target for a short seller, because the short seller has something to substantiate its argument. It can say, look, They've done it before in the past, so they're doing it again right now. I think that's more likely than Supermicro actually doing this same violation again now, 4 years later. Unless they're doing it unintentionally where they don't understand the rules, because accounting rules are very complicated, and the way sales and orders are recorded, there's a lot of complexity to those situations. For instance, I'll give you one example. When a company books an order and it gets money, let's say it makes a order, right? Like they get $100 million to deliver a certain package of products. Well, Supermicro Computer, they can't recognize that $100 million in revenue until they fulfill that obligation in the contract. So they might get $100 million today, but they may not serve the terms of that contract until 1 year later. And so they're not able to recognize that as revenue until 1 year later. But if the management team was counting that as revenue immediately, that would be not according to US GAAP principles, generally accepted accounting principles. And so they could be accused of accounting violations, of making a similar mistake in the way they recognize revenue. And so on August 28th, the day after the report, Supermicro said it would be filing its fiscal 2024 annual report with the SEC late. It would miss the deadline. And so that added fuel to the speculation from investors that maybe there is something going on with Supermicro, because this is the company taking steps to file the report late. This isn't just a report from a short seller who's obviously incentivized to bring the stock price down. This is Supermicro actually saying, excuse me, we're gonna wait because we're not sure about our financial statements. We're not confident that it's 100% accurate. We just want to make sure it's 100% accurate. But then in a September 3 letter to customers, the CEO of Supermicro said the short seller report contains false or inaccurate statements about our company. Now that letter, and I did a video about it, was unclear and it wasn't very reassuring to Supermicro Computer stock investors. And as a result, it didn't do much to lift the stock price higher or to alleviate some of these concerns. It was too broad. It was too generic. It didn't address specific concerns. It just said, in the future, we will address these concerns, but the letter didn't actually address them. So the former employee in his lawsuit alleges that Supermicro in some instances recognized revenue improperly from the years 2020 to 2022. He said in some cases it booked revenue on sales that hadn't been completed. So either booking sales too early, like in the example I mentioned earlier, or maybe booking sales that were not actually sales. The latter of which would be a bigger problem. The former would not be as big of a problem. If you're booking revenue a little bit earlier than you should be booking revenue, it's not as big of a deal as if you're booking revenue that didn't actually exist. So Supermicro Computer stock price obviously is down on this news, 16% today. What does that mean for Supermicro Computer stock investors? Is it a buying opportunity? Should you jump in? I have said repeatedly that this is a situation that I don't think is a buying opportunity. I think Supermicro investors, or those that are interested in Supermicro, should wait to see the outcome of these events because they are so uncertain and so wide in disparity in terms of the potential outcomes. And it's a situation where it can only get worse for Supermicro Computer. The best case scenario is that it gets cleared of all wrongdoing, and the worst case scenario could be really, really bad. So in this situation, investors, I think it's better to just wait, get more information before you make a decision on Supermicro Computer stock. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.